Lululemon, this is a company we took a look at this company I think about 6 months ago. Certainly, it's a company that does not need an introduction. It's a global brand, athletic apparel, yoga, running, footwear, accessories. They have 711 company-owned stores in 17 countries. They have e-commerce, wholesale, and this is a Vancouver founded company back in 1998. So let's take a look at the company over the last year here. Share price performance over the last 12 months, if we just look at that, is actually reasonably good. About 24% is what the return has been. But what we can see here is just recently, since the start of the year, companies really taken a downward turn. So Lulu's down 23% from its highs, which were just at the end of 2023, but down 18% just after the release of its Q4 2023 results. Which were just issued recently. So what happened here? Let's take a look, first of all, at the financials. So Q4 2023, at face value, the numbers look very good. 16% growth in revenue. Gross margins were up about 200 basis points. 16% growth again in adjusted operating income, and about 20% growth in adjusted EPS. Same thing can be said for the full year results, with revenue up 19%. Good expansion of gross margins, up 240 basis points, operating income up 25%, and adjusted EPS up 27%. Okay, so what happened here? Essentially, this is not this pullback in the share price is not about what happened in the fourth quarter, but rather about what the expectations are for the current year, 2024. So the company did issue 2024 guidance. They're expecting net revenue to be about $10.8 billion. So that's growth in the range of 10 to 11%, excluding the fact that there's going to be an extra week in 2024. So they're looking at 11% growth in revenue, and then as well about 11% growth in earnings per share, including the extra week. One of the things that the management did talk about is that they are seeing a slowdown in the US market, a shift in consumer behavior, and this has led to a slower start to the year. So now when we look at these numbers at face value, 11% growth in revenue, in earnings per share, that's not too bad. But we also have to consider that this is coming off of earnings growth nearing 30%, right? So even though we're still getting positive earnings growth expected for 2024, it's really come down from what investors are accustomed to, that kind of 20 to 27% range. And then with the comments about a slowdown in the US, this has really just injected some uncertainty into the investor and sentiment for the stock price. And what we've seen now is the shares pull back. Now, in terms of just the outlook and the commentary, the company opened 56 net new stores during the year, bringing the number up to 711 stores. They're repurchasing shares, repurchased about 554 million of shares. And then they also have their growth targets, which they refer to as power of 3 times 2. This is a plan that they've laid out. They laid it out in 2021, and this is to double the size of the business from 2021 to 2026. So bringing net revenues up from 6.25 to 12.5 billion. So it's essentially doubling their revenues over a 5-year period. Now, what this equates to is growth, average compound growth over these 5 years of 15% per year. Now, if you were to take their revenues reported in 2023 and extrapolate that out to 2026, they only need to grow the revenues at about 9% per year to hit this target. So they're actually still well on track to hit the target. There's no issue there. Perhaps what's worked against them somewhat is that they were ahead of their targets for the first 2 years. They overperformed. Investors got used to that, expecting that they would continue to overperform. Now it looks like growth is reverting somewhat, even though it's still positive, even though they're still on track to hit their targets. And again, this has just created some uncertainty around the future growth rate. Looking at the balance sheet, very solid balance sheet. It's a net cash business, $2.2 billion in cash in cash equivalents, 1.4 billion in leases, so net cash balance of about $800 million. And then in terms of the valuation, based on the guidance for 2024, they're trading at about 28 times earnings. So, they've come down from around the 35 times. Relative to Lululemon's historic valuation, 28 times is certainly reasonable. However, again, this is also on the back of lower growth expectations, and it's still a premium to the market. So that's something to consider. What's our take on Lululemon? Well, we believe the fundamentals still continue to be strong. They are continuing to grow. They're on track with their previous target. They have a fantastic global brand with a lot of customer loyalty and a nice net cash balance. So they're sitting on a solid financial foundation. But there is the slowdown that has hit the share price, a warning for management. The valuation is not completely unreasonable, but it's still on the pricey side. So we do think long-term it's an opportunity to invest in a strong global brand, but it's really still not cheap. We're on the sidelines with Lululemon right now. We'll continue to watch it. Maybe if the shares continue to pull back, there could be a value opportunity to buy a great company.
Yeah, it's a good summary. I'm a customer, and I noted when I got home from our conference, there was a new pair of Lululemon shoes and something else, not mine, but sitting on the
So are you a
floor, and a
customer
couple
or
Lululemon
somebody else in
boxes.
your house a customer
Well, there's I have some Lululemon stuff.
that you purchased yourself?
Yeah.
Okay.
I've got some
And
Lulus
then
on
Because I
right
also
now.
have Lululemon things, but it's my wife who's the customer. So
yeah, no, and Candace is the customer, but I have a pair of shorts and like a vest or something like that. Yeah.
It's high quality stuff, man.
it's good.
Yeah.
It's
Oh, it is. Yeah.
Yeah.
It is definitely pricey though. Like
That's why you got to wait or just have a sister who sends you a text every single time there's a sale. So my sister will wait till things are on sale and she's like, "Hey, you should buy these." So
we happen to have an in. We know somebody who flies for the family. So like the Lululemon, the guy who runs it. So yeah. There's a discount. I can't. I probably shouldn't. It's funny. Floating around. All right. So what are we doing? Where are we moving to?
Brett.
You're moving me.
That's true. Is there anything else we wanted to talk about with Lulu? I mean, it's a good company. Like Aaron said, the valuations, even after the drop, are
it's not bad.
A little high.
It's not.
No,
horrible.
it's not. It's not horrible.
I'd say it's fair value given what's been going on with the company.
Even though it's an iconic brand now, and it has such brand power, I always get scared about fashion companies because brands, if 2 years from now, the kids, like if there's an 18-year-old in the house says, I don't like Lululemon, and everybody in that group says, I don't like it, even if it's great clothing, it can move against you, and suddenly you're not able to have a premium price. But Lululemon seems to have skirted all of that to date, so I mean it's hard to bet against them over the long term.